Well, what's going on, you guys? Welcome back to another portfolio update. In this video, I'm going to take you guys through all the moves that I made today and yesterday. Welcome to the about 20 or so new subscribers from last night's episode on Tevis's channel. Very nice guy and very smart guy. So I appreciated the opportunity to be on his channel with TJ and go over some different trades over there. On this channel, I basically cover every move that I make in the portfolio live day by day and take you guys through the mindset of every move and everything that I'm doing. I'm hoping to get this portfolio to over $1 million in the next 12 months. So I think it's going to be an exciting time, and we'll cover everything live. So today's main stock account was pretty much flat. We had... For today's primary movers, we had Palantir down 1.3, we had CrowdStrike up 1.3, and we had Meta down 1.6. If you guys see that something's missing out of the portfolio, and all of a sudden we have a decent amount of cash at $14,678, and that's because I had to put down a dog yesterday. I had to put down a dog, and it's really sad, but when they get old and when they get, where they're not really thriving, they're just existing, you got to put them out of their misery. And so I had to put down Riot Platforms for pretty much a break even. So I was just happy to get out of this at a break even, get my 12 grand back, and hopefully allocate it towards some positions that will do much better. I have to say, I do think Riot will do fairly well over the next leg of this Bitcoin bull run, but it just wasn't performing to my standards. And it's not like my standards are super high for this, but I feel that if you're going to go down the riskier road of crypto, I personally want to take maximum advantage over the next 12 months and put that money into things that could 5, 6, 7, or even 10x. Yes, that is absolutely possible as long as Bitcoin does its thing and goes to 120 to 150. Then those returns are certainly possible in some other assets that I will get into in today's video. So yeah, obviously you can you're not able to sell options on the products I'm going to be talking about putting the money into, but I think you're still going to do much better. So I did that yesterday, and then for today I rolled my Shopify my Shopify call from 75 to 76, paid about an $18 debit in order to do that, and I rolled it from 10/18, which was this Friday, to November 1st. So definitely glad to move that out, able to roll up, able to roll out in price, and so that's a win-win in my opinion. Only paying $18 doesn't bother me at all. So that was the main stock account. Let's look at the crypto account really quickly. All right, so it's kind of a weird dynamic right now. Bitcoin has been pushing up for the past 2 days, and altcoins have been suffering a bit. And that's pretty much due to the fact that for Bitcoin to make new highs, the money has to come out of some of these altcoins in order to really push past the shorts. Because don't get it twisted, there's definitely a lot of supports or shorts, at the resistance level that we are currently at. In this last 5% between like 67, 68, and then the 72 level, in that distance, there's a lot of people just shorting the range that we're in, because we've been in a gigantic range over the past 6 months. So people are just continuing to try to take advantage of that range. So to completely go past that range and hold it, it's definitely going to take some very good momentum. And so to do that, some money has to come out of altcoins. But if we look at it, these are not big down moves, 0.7%, 2%, 1%, 7%. Some of them are even up, 3%, 2%. And so these are not big down moves, but some of the money, just has to rotate back into Bitcoin. But 100%, once Bitcoin starts making new all-time highs, altcoins are going to by far outperform anything Bitcoin does. So definitely happy with this portfolio. I added to Fetch a few days ago, so now that's moved up from pretty much the smallest position now to, let's see, 1, 2, 3, 4, 5, 6, 7, to the number 8 position in the portfolio. I'm really happy having 10. Seems like just a nice even number to have for the crypto portfolio. I took $3,000 out of Solana and put that into Fetch in order to raise those funds for Fetch. Any other moves in this portfolio? I don't think so recently. Yeah, that's pretty much it. So this one's still looking good. Now, we did have some moves in the Robinhood portfolio today. So this portfolio is at 12,400. This is the portfolio I like to do spreads or buy leaps or some more, I wouldn't say degenerate, but more riskier trades that I want to keep out of the main portfolio. That way I'm not able to really size up in these positions because the portfolio is small compared to the main stock account. So in this portfolio, we have one Snow Leap for 110 January 2026. It's up 6%. We did sell calls against that for 120, which are now back out of the money, which is good. These were up 37% today, so we're only down 11% and feeling great about those. So we have a new addition to this portfolio. I added the Tesla 200 195 put credit spreads. So I collected, let's go to history. So I collected $254 right here in credit for these credit spreads, which is good. It does also meet my minimum criteria. So make sure you follow one basic rule when it comes to credit spreads. You want to collect at least 25%, preferably a third. So you really want to get to like 33%, but 25% is a minimum of what you need to collect the width of the spread in order to give yourself a chance. So the width of these spreads is obviously $5. We got 195 and we got 200. The width of that spread is $5. So the minimum that you want to collect, if we go out and just so you guys can all see, 5 times 25% is 125. So we want to collect a minimum of 125 per spread. And as you can see right here, we collected 127. So that does meet the criteria. Why do you need to do that? Because if something goes wrong, if something goes against you, if you need to roll this, having collected a decent amount of credit is going to help enable that, as well as you don't want to let your max loss, which let's see if it won't show it here. I have to go into that. I won't cover that today, but basically your max loss is going to be anywhere between 3 and 4 times your credit that you collected. And so if you only collected a small credit, your max loss is going to far exceed what you collected. And so that's not a good risk to reward. So you want to collect at least 25% of the width of the spread in order to help you out. So I bought these literally right at the close, like $3.59. It kind of sucked because I got a little nervous because I had looked at this around 3 o'clock and I said I'll wait because there's often some movement within power hour, within the last hour of the market. And I logged back on at like 3:57 and the credit was at like $1.15. I'm like, well, man, I'm not going to do this anymore. It doesn't meet my standards. And then I guess the bid and the ask shifted around a little bit and it went up to 127. So I put it in real quick. Pause. I put the order in real quick and, was able to collect 127, which does meet my criteria, which is why these are at like 0% because they went in right at the close. So let me go back to it real quick. So my break even is 198.73. So if Tesla is below 198.73, by expiration, that means I'm going to be losing money. And if it's below 195, that means I'm going to lose, that's max loss. I'm going to lose all the money at that point. So I think these are good. If Tesla is below 200 at that point, it'll kind of make me happy because I'll be actually buying shares at that point. So yeah, we got that one. And then lastly, we have the 3 leaps, Celsius, which are now down 23%. Not selling calls against those quite yet, just waiting for a nice pump on a green day. And then lastly, just looking at so wanted to just look at the Tesla chart really quickly. On this, we have the 50 and the 200 moving averages, and then the Keltner channels added to this, which are the green bands here. So I'm just seeing the 200 and the 200 moving average is right here at $201. I'm seeing we have a bottom of a Keltner channel at 214, and so I'm feeling pretty good about being over 198 by the end of this. So I don't think that should be a problem. And then lastly, let's just look at the near-term expiring options. We don't have too many options on right now. Tesla, we're leaving open for earnings, not selling any calls against that right now. Shopify, those are out to November 1st, since those got rolled. Palantir, we do have 25th of October, 34 calls, so I'm going to have to roll those out probably next week. Enphase, we just put that on, and then that's it for near-term expiring options. So definitely excited for the Robinhood event tonight. I don't think I'll be switching no matter what they display because Schwab does have one thing that Robinhood will never have based on my conversations with Robinhood, and so that's going to keep me from doing that because it's something that I want to incorporate into my strategy. It's something that I've been practicing with for a while, but not ready to really show on the channel yet because it is something that can blow up your account if you don't know what you're doing. So not sure if I'll ever really cover that. I'm sure I will at some point, but I don't want anyone to follow me into a trade and like blow up their account. But I don't feel Robinhood will ever have that ability. So I don't think I'll ever switch completely back to Robinhood 100%, but I'm always going to have the small Robinhood account and build that up to hopefully like 6 figures and then just have that there as well. So but we'll see. I hope you guys all having a great Wednesday. I'll see you guys in the next video, and as always, take care and God bless.